So apart from all those lists of reliefs, the government, in recognizing the fact that, the high cost of living in Malaysia and, the implementation of GST, right, to help alleviate the burden of the middle income group, right, they have also introduced what you call a special one-time relief of 2,000 ringgit. Okay, this relief is only applicable for those earning 8,000 ringgit, up to 8,000 ringgit, or up to a maximum of 96,000 ringgit in a year. Right? So this relief, if you go online and file in your tax return, and if your income is less than 96,000 ringgit, the system automatically just pops up, the relief will come up, the 2,000 ringgit relief. Okay? So we noted, based on our studies and what we have found out from the economic planning unit, is that only 11% of the population of Malaysia actually earns income less than 96,000 ringgit a year. Okay, so it's really to alleviate the middle income group, the burden on the middle income group, and we don't know whether it will be extended to next year, right? But for the time being, it's only for 2013. Okay. Other deductions or rebates you can claim if you are a member of a professional body. Okay, you have to be like for myself, I have to be a member of a professional accounting body, and I have to pay subscription fees. So the subscription fees, right, that I pay, right, I can claim it as a deduction against my total income. Okay, so I can claim that, and I have to ensure that I have the proper receipt to support it. Similarly, if you make donations, approved donations, how do you know you are making an approved donations? It has, when you see the donation receipt, right, it'll say that it's approved donation under section 44(6), right? So that is an approved donation. So any approved donations you make, you can claim a deduction on it, provided your donation does not exceed 7% of your aggregate income. So it's only up to 7% only. If you make more donations, you cannot claim a deduction. So all your donation receipts, again, you need to compile them. Okay? And I've mentioned earlier, if you are earning less than 35,000 ringgit in a year, you can claim a rebate of 400 ringgit per person. So if together with your spouse, if it's not more than 35,000 ringgit, you can claim a rebate up to 800 ringgit. Now this rebate is at the tax liability level. That means when you calculate your tax already, and then you offset your tax liability, the rebate against your tax liability, so it lowers your tax liability automatically. Right? So for those of you who contribute to zakat, right, you can also claim a rebate on it. There is no limit, and you just need to prove it with the receipts that's issued by the religious authorities. Okay? Okay. So Hilda will actually now covers what you need to do to actually avoid penalties and ensure that you comply with the law. Okay.
Thank you, Ping Ping. I'm not going to keep you much longer. I've been told we've seriously overrun. But some very important facts. Just one last tip here, and many of you are not aware of it. Then I'll bring you through to what's the smart thing to do. Okay? If you owe the tax authorities money, okay? Say for example, you've moved from your housing from one place to another, and you still get letters to your old address. And you don't know that you owe the tax authorities money. The red letters have been going to somewhere else, yeah, not your current place that you stay. The tax authorities actually keep a list of all these errant taxpayers. And what they can do is, if they invoke a section called 104, Section 104 of the Income Tax Act, they can actually get a certificate, they can actually provide a certificate of outstanding demand to the police or the immigration, the police department, the commissioner of police or the immigration department, to stop you from leaving the country. Okay? Now, it's something no one wants, yeah? And we have that. We have like in the middle of the night, client calling us, I'm stuck here, what am I supposed to do? What am I supposed to provide to the immigration authorities to show that actually you don't owe that tax? And many times I can tell you that the amount that you owe the tax authorities might be no fault of yours. Okay? Yes, sometimes you might have overlooked payments, but most times it's the tax authority systems that might not have been updated. Okay? You know those years that when monthly tax deduction started, tax authorities were actually fumbling with the system that captures the monthly tax deductions. Okay, so things like that happens, and this is something that you don't want happen. So what do? You go to the collections unit of the income tax, get your SG number to the officer. The officer who handles your case will show you your file and tell you whether you owe money or not. And if you owe money and you're able to show that those money are actually monies that have already in the past been paid to them, then they will clear that position for you. They will actually give you a detailed position. Okay, so this is something that you certainly want to avoid. If you go to this website, and this is not the tax authorities website, but the immigration website, meaning to say the tax authorities have already invoked 104. Okay, section 104, and you find your name there, it means that at any time when you leave the country, you could be stopped at the immigration. So what's the smart thing to do here? Smart thing is, don't upset the IRB. Two things the IRB gets upset over. One is non-compliance and omission of income or incorrect reporting of income, and the other one is late reporting of income or late payment of income. Two sets of penalties applies to these. The first one is the late payment of the late filing and the late payment. Okay? Now this system, the profession feels is very unfair, and I'll show you why. Okay? Now we talked about the filing due date of 30th April, 30th June. And then you obviously get the grace period if you're e-filing, the extra 15 days. Say, for example, you file on the 17th of, you have business income, you file on the 17th of July, okay, for a B on the 17th of July. You're 2 days late. The tax authorities immediately imposes 20% on that tax liability that you compute on the form. Okay? I'm going to show you why this is actually, the profession feels, is a very unfair way of penalizing taxpayers. Now, I think the important thing here is, as a taxpayer, the income tax rules actually, the tax authorities have a right to this. Okay? It's just that these rates actually are substantially lower than what the Income Tax Act actually gives the tax authorities a right to impose tax on you. In any case, because it can go up to 100% of, the penalty can go up to 100% of your tax liability, or even 200%, or even 300% in certain cases of willful evasion. Okay? But these rates itself is unfair because it doesn't take into consideration the fact that amounts could have been deducted from you on a monthly basis already. As an employee, you don't forget you pay taxes at source through the MTD system. A person earning other types of income could be paying installment payments through the CP 500 installment plan. So you're already paying taxes at source, and those amounts already sit with the tax authorities as a credit. When you file your returns, you're only topping up taxes that have been underpaid. But this penalty doesn't take that into consideration. So look at this example here. This individual earns business income, rental income, taxable income, total income 80,000. He claims a personal relief of 9,000. The income subject to tax is 71,000. He applies the liability in accordance with our graduated rates. So the liability that he computes is 6,890. He's been paying installments over the year, accumulating to 6,005. Technically, he owes the tax authorities, had he filed on the 15th of April, 390 ringgits, right? That 20% penalty is calculated on 6,890 and not on the balance of 390. technically the tax authorities have that right because the legislation says that. But we feel that it's unfair because the amount has already been sitting with you for up to a year. Okay, so the profession has been lobbying seriously on this. The profession together with the accounting bodies have been lobbying against this, and we are gaining grounds. Okay, so we are hoping that the tax authorities will slowly be more receptive to the fact that people actually pay tax at source for most types of income. The employer pays taxes through the MTD system, right? So the MTD system has its own law as well. So if your employer has not been complying with the MTD system, completely, okay, on how much the actual amount, and they have been making mistakes, say, that is an issue that the revenue needs to deal with the employer, because it's the employer's obligation to ensure correct MTD. Because we need to finish this session very quickly, can I just urge all of you to maybe hold on to the questions until the end. Okay, so firstly is the late filing and late payments. Number 2, the incorrect reporting of income or omission of income. Okay, and these are really found out through tax audits. Okay, tax authorities find out about omissions and underreporting through tax audits. Now, this is slightly fairer in that although the tax authorities, in the tax audit framework, the tax authorities actually give, the rates of penalty that it in practice will apply, and it goes up to 45%, but that 45% is applicable for underpaid liability, not the full total tax liability. Okay, so this is slightly fairer if you volunteer information to the tax authorities. So before they carry out an audit on you and find out that you haven't been reporting things correctly, either through carelessness or or any other circumstances, they will reduce this 45% further to 35%. Okay, so you have negotiation power when you're actually volunteering information to the tax authorities. Okay. Settlement penalties, that's just a straight off. If you make your payment after the 15th of May or the 15th of July, straight away you get a 10% against what you need to pay. And if you delay it further for a further 60 days, you get an additional 5% on that 10%. Okay, so it might total up to 15.5%. So this is the session on that will impact your 2013 tax filing. We're just going to close this session with some key developments that you need to know. 2 things actually. One on tax rates deduction. Okay, in the past, I think in 2013 you did see some slight adjustments to rates, yeah, a 1% reduction and all that. Now this is actually more impactful. And we feel that this could actually be due to the introduction of GST in 2014. Effective from 2014, our highest tax rate dropped by 1 percentage point to 25%. Okay? Now, I don't know how many of you, actually hear people saying that, oh, our tax rate's very steep, our graduated rate's very steep. We hit top tax rate very easily. You earn 100,000, you already hit 26%. Tax authorities have taken that into account. And again, this is through a lot of lobbying from the profession. They have actually flattened the rates a bit. You hit top tax rate when you earn an income of 400,000. So they've increased that highest band 4 times, from 100,000 now to 400,000. Okay? Now, we talked a lot about middle income group and all that, yeah? You see that for the bands between 50,000 to 100,000, there are 3 percentage points reductions. Okay? I think this actually is quite a significant reduction. Whether or not the trend will show that it continues to drop, we need to wait and see. Okay? This is just for your information only. It's good knowledge to have. to see how our rates fare against countries in the region. We are nowhere near Singapore and Hong Kong, who literally pays nothing. Okay? We used to be at or around China rates. Although China top tax rates is 30+%, you usually, when you look at the effective tax liability, we are actually quite near to China only because they have huge amount of allowances. Their allowances can come in, massive tens of thousands figures. Okay, so effectively, we have always been quite close to China tax rates. But now, with the 2015 introduction of new tax rates, you can see that we're a couple of percentage points lower than China now. Okay, but still, Thailand and Australia in the Pacific region actually still leads the pack on income tax rates, personal income tax rates. The other thing to highlight to you is MTD, monthly tax deduction for employees, could be final tax. I mentioned this earlier, we don't have to all scramble to file by 30th of April, yeah? Certain categories of employees, if you're earning only cash income for now. Why? Because MTD is only applicable on cash income, okay? If you're only earning cash income, you're not filing combined assessments, and you've worked the entire year for the same employer, you might be able to qualify for MTD as final tax. Means you don't need to file and you don't need to top up taxes anymore. Okay? So you just treat whatever your employer has deducted as the final tax. Okay? And this has already come into effect. It's effective from the 1st of January 2014. Okay? So the takeaways, the key takeaways for today, I'm sorry we kept you for so long, is we've given you an overview. We hope that you have a better understanding of the Malaysian personal income tax regime, that you know how to maximize your taxes, minimize your taxes through the maximizing of tax benefits and reliefs. Settle your taxes on time. I mean, that's a no-brainer. File your taxes on time as well. And ensure that you keep the supporting records. Okay? Now I'm going to leave you with, the profound thoughts of Nathan Rothschild. Thank you very much.